Hello, my name is Philippe, Cloutier, President and CEO of Cartier Resources, with the ticker ECR on the TSX Ventures Exchange. We're an exploration company for gold in the Abitibi Greenstone Belt in Quebec, Canada. And our flagship project is the Chimo Mine, past-producing gold mine project. And we have just delivered a PEA, and I'm happy to talk about it.
Philippe, very nice to meet you again, to see you again. Thank you for the introduction. You put out the PEA. You've got some good exploration results coming through. First, perhaps, can we just talk about the forest fires and what's happening on the ground with you in Quebec?
Okay, well, yeah, I think that everybody found out about that. There's a huge and historic forest fires here that's never seen before, at least since we've been around. And that led to I think, province-wide ban, access to forests, access to the territory, early June. And it's still, those bans are still in effect for the James Bay area where there's a lithium play going on. But it's been pretty much lifted in the Abitibi area. Now, when the bans were put in force in early June, we had just completed phase one. It's a mighty coincidence, but we had completed the phase one 25,000 meter diamond drill program that we had initiated in August 2022. We got all those holes done, and currently now those drills have been suspended. I think the machines are still in the bush, but we have over 2,000 diamond drill holes, samples from that program still in the lab. So we anticipate more diamond drill results. And because of the market conditions, because of the absence of smart money out there, we have decided to wait until the markets get better. We have decided to paper engineer our project even further because we have a PEA that, basically states that this thing can fly. And it's no small feat because, the Chimo Mine Project is a past-producing mine. And as we've discussed before, Merlin, it has a benefit of, metallurgical, historics, rock mechanics, so on and so forth, plus a shaft that goes out to 920 meters with, I think, 70 kilometers of underground drifts. It's within a driving distance of the Val-d'Or mining camp with qualified workforce and infrastructure. So it's a perfect project, safe political jurisdiction, blah, blah, blah.
I think reading through your materials, the first 25,000 meters tested down to about 800 meters. So that kind of top 800 meters was where you were kind of essentially testing. And I think you had a plan to drill in the next phase of 25,000 meters down from 800 meters down to 1,600 meters. But essentially what you're saying is that that's kind of parked for now, is it?
It is parked for now. What we wanted to do with the first phase was actually drill to, in response to where the consultants that had produced the fourth resource estimate said, look, while we're bridging you to the PEA level, if you drill these areas, and you hit with a X success rate, they would be included yet in a fifth resource assessment. We could update the PEA. So we got that done. It was really highly successful in that all of the holes that we drilled and intersected, so forth, so on, will be added to the fifth resource assessment. And we were on the verge of continuing because, the success rate was there. But we want to conserve our cash because we don't know how long this market storm is going to last.
Okay, so just trying to get some things in my head straight. The fourth resource estimate has taken you up to 2.4 million ounces. Okay, 2.4 million. And from your presentation, the kind of the fifth, what you're targeting is 3 million ounces, and then possibly more than that. That's that'd be the nice to have.
Yeah, but the PEA did provide a snapshot of what this could look like. In other words, production of about just under 120,000 ounces per year. You're mining 4,500 tons per day, right? and you're actually milling only 2,400 because, as you will remember, this mineralization we've tested it in 2 ore sorting met labs, and we've shown that you could increase the grade by about 117% and reduce the cost of handling, unnecessary waste by about 46%. You're not handling that waste. You're not crushing that waste. You're not sending that waste to to tailings or anything. You're actually sending back paste backfill, and that is very significant. What needs to be said though is we're pacing ourselves through the expansion of the resource because we know we will never expand the production unless we increase dramatically CapEx. It will be more the extension in mine lives, in years of mine life of the project. And I think that 120,000 ounces per year is nothing to sneeze at.
Yeah, no, 120,000 ounces a year is a good level. I mean, any mid-tier company kind of wakes up at around that level. 100,000 ounces is a bit on the small side, but 120,000 ounces starts to get the attraction of other people's eyes on it, and you have a kind of a critical mass of production.
Yes, and well, let's keep in mind though that in and around Val-d'Or, I mean, east of the Goldex and Lamaque mine, there has been look at Pro. They've delineated 5 million ounces. Add our 3 million ounces to theirs. You could consolidate ground and reach a critical mass here. And when you do that, you could envisage a hub and spoke approach. So there's creative thinking to be done in the short term by, advanced exploration juniors such as O3, Probe, Cartier, Radisson, and other companies, east and west, along the Cadillac Fault. And so if the juniors keep doing what they've always done in an evolving economic landscape, well, they're going to get dismal results. And so I think that to unlock the potential, you need to start thinking creatively and how you're going to keep lowering the capex of these projects. And by doing that, you're increasing the net present value of these things.
But let's come back to the idea of expanding beyond 2.4 million ounces. You've got a 10-year mine life. You've got 120,000 or 117,000 ounces per annum. Surely that's enough. Anybody, any structural geologist, anybody who's used to the Abitibi, with the indications you've got and with the understanding you've got of the mineralizing systems, would be able to take a view on future mine life and the probability of finding more resources and reserves and resources. Is it not the case that actually you should park the idea of kind of the mineral resource estimate 5? Okay, let's process the 2,000 samples you've got now, but let's just take what we've got and drive that to production, because otherwise, if you look at the timelines, it's going to be, oh my God, we're going to be here for another 5 years while we're still trying to work out what to do.
I agree. At the PEA level, you could include inferred and indicated. To get that to the pre-feasibility and feasibility and bankroll your project, you would need to conduct quite a bit of infill drilling to increase you take your inferred to your indicated and then to measured. When you do that, you're not increasing your ounce count. You're increasing the reliability, but at a significant cost. Now, that's fine. It's great to increase your reliability when you're a remote project and there's no historics. There's no geostatistical behavior that you could bank your project on. The Chimo Mine Project is a past-producing gold mine, and we have the benefit of that. But that's not recognized. It is recognized by the local corporates, but it's not recognized by, bankers on Bay Street in New York. So we have to, and because of the way you have to respect the geology of your deposit at all times. You can't go out of bounds of that. And the geology of our deposit, has very well-defined vectors and extension vectors, steeply plunging north-northwest at depth. So the more you want to increase the ounces, well, you have to go at depth. And if you're going at depth, you're increasing the cost of diamond drilling. Fortunately for us...
Can I interrupt you there? Because you in the presentation, you talk about targeting 3 million ounces and 3.4 million ounces. But what you've just been telling me about is actually infill drilling, which is not growing your resource. So I'm just confused as to what the plan is.
No. The plan is to keep growing your resource by stepping out laterally and at depth proximal to the shaft. If you look at the long section and the modeling that has been done, it is quite attainable within the project area. What we would like to show people that there's another component to the Chimo Mine Project. Over a 70 or 80 year exploration historic, there have been numerous other deposits within a 15-kilometer stretch, where Chimo is central. There's the East Nordau deposit, there's the Bateman Bay, there's the Simo West, there's the Portal Zone. These things were actually drill tested, and you have indicated deposits that have been discovered that were never followed up at depth. And so that's another group of targets, inexpensive to drill, that you could develop, ounce count there. Listen, it's just that right now markets are not responding to any way, shape, or form of success. And therefore, a company such as Cartier has to apply lean and mean management of the cash that it has. With over $2.5 million in the bank, we believe we have enough money to weather the storm for, at least 2 to 3 years. I wouldn't want this bear market to last any longer, though.
Okay. I mean, I come back to the PEA. If you put it, looking at the number at $2,000 an ounce, and the current gold price is $20 shy of that, your NPV is $539 million Canadian, and your IRR is up near 26%. It starts to look like a real project. The last few years of exploration for Cartier has shown that the market's actually not rewarding that. And is it now not the case, as you say, to do the paper engineering, to really focus on optimizing reduce the capex, as you said, through kind of thinking creatively? But there will come a time when there's infill ounces that are required and
will be needed.
Yeah. So yeah. I mean, surely the company, instead of targeting new resources, new ounces, should be targeting getting that, let's call it a $600 million project, into production.
What I'm talking about, trying to find the solution is, how do you finance that next step, that step towards pre-feasibility and feasibility? How do you finance that next exploration program? You don't want to be put in a situation where you're so vulnerable that you have to take a cheap offer. And that's not going to happen. I mean, we understand the value of our asset. We understand that we're severely undervalued, but we also understand that we're in a position, knowing and understanding the markets and our valuation, that we can field those offers and decide to extend our exploration program to further valuation or to double down. Now, I attract your attention to Appian and the Cisco Metals, where they signed a deal, a creative development partnership, where Appian comes in and bridges the PEA level project that they're at right up to feasibility. So they get, the Pine Point people get to do all that infill drilling, all the testing, all the development work, but understandably they will retro seed a portion of that deposit to the incoming partner. You have to make do with the economic situation in the markets. And so, like I say, our our plan was to do phase 2 drilling and continue building resources. We now have to step back and rethink the program, and that's what we're doing.
You said you've got a kind of a treasury to last a couple of years of kind of the bad markets. Can you have you had an time to kind of recalibrate what the plan is for the next 6 to 12 months is? You know, what are you going to be doing? You said you've got 2,000 meters of 2,000 samples to come through, so those presumably there'll be some drill results to come out. In addition to that, what else are you working on in terms of kind of news flow or potential catalysts for the market?
All right. Whilst we were drilling, we were also compiling all those targets along the 15-kilometer stretch. So in an inexpensive fashion, we could light up one of these targets very quickly with a smallish diamond drill program. But you're quite right. The immediate news flow is continued diamond drill results from the program that we just shut down. It's designing the new program that can be done over the winter months. And it is monitoring the opportunities that we have in front of us. And also imagining solutions that, that we haven't had the time to explore and set in motion. You got to understand that we don't have we're a 3-man team here. When you say
monitoring the opportunities that are in front of you, what do you mean by that?
Well, there are other juniors, there are other companies that are in similar situations. And we've seen what the seniors are doing. They're merging amongst themselves. The intermediates are doing the same thing. And there's been a request by the market, by the funds, and by the sovereign funds that the juniors should be thinking along those same lines, creating a super.
Isn't that just putting lots of hungry, creating a family with lots of hungry children?
No, well, exactly. You weed out the hungry children and you just put the ones that are healthy and strong in under the same roof, and the tough. Too bad for those that are hungry and can't make the grade. I mean, they should have been working towards building ounces and building value. And so we're in a situation where you want to take and look at the junior market that have assembled tremendous or value, and you want them to reach that critical mass to be able to attract. Right now in the Abitibi, Agnico has grown to a size that their new filters and their new criteria are quite different from what they were, a few years ago. So it's all the value proposition and the business opportunity will be in creating that competitive tension in and around our assets.
When I think about juniors merging, I always think, you'll weed out the strong, and the companies with good assets typically don't want to merge with a company with weak assets. So either you've got a good asset and you want to stay independent, or you've got it's not always the case. It's not always the case. There can be special occasions when there are.
But listen, my analogy of sailing still stands. When you want to go from point A to point B, you have to adjust your sails to the prevailing winds, and any smart captain will apply that strategy. And we've seen several of our competitors, pull off some very good moves recently, and we hope it continues. And we'll participate in that.
Thank you. And you said the smart money wasn't there, but what was the kind of the feedback you were getting from the marketing that you have done? Is it don't call me now? We want to look at gold in 6 months' time, or is it tell us what you've got, we're just not ready to invest?
A combination of both, with a reminder that, hey, Phil, 3 or 4 years ago, I invested in stories like this that they already had their PEAs, and we thought we'd be off to the races. And Lord and behold, we're down 30, 40, 50%. So if you want me to buy you, I have to sell one of my losing positions. So I fully sympathize with that. But our value proposition is we have delivered value. It's unrecognized, and I think it's a tremendous opportunity. It's especially at these share price levels. But I'm convinced I'm convinced enough to the point that I recently bought shares in the market. So
we are all hoping that the gold price moves, because it is a relatively strong gold price market.
yeah.
I think at the beginning of the year it was down at 1650, and we're up now almost 2000, close to historic highs. We're all hoping
And
that
the juniors haven't followed suit.
Exactly. Yeah, so we're all hoping that there's a kind of a follow through. There's some linkage that joins up in due course, and then the tone of the conversation will be very different.
Well, exactly. And I think, and I'll repeat myself, if this is a tremendous opportunity to come up with some, some really good ideas on your projects and do the type of work you never really get to do when you're managing 2, 3, or 4 drills, right? You get to question, you get to look at your project from a different angle, and you discover things, and you say, okay. And then what generally happens is markets turned, and you were about to act on this one good idea or one good target, and you don't, because when the markets turn, people forget their good resolutions, right?
So it's a time for reflection, time for getting in all the data of the projects you've done so far, analyzing the data, and then being ready to move when the market turns.
Absolutely. And I think we're one of the very fortunate with cash, a tremendous asset, a great address to be operating in. The share price is depressing, but I'm a very comfortable CEO with this,